Hello, hello. Welcome. I'm assuming, Mac, you got my WhatsApp, so you're listening, and yeah, I wonder if you can figure out the cryptic message behind the channel name. I know you're old school, so I doubt you will get it. Anyway, bit of fun. Right. You mentioned a bit of interest in the way I traded, because I know you trade, is it moving averages and Bollinger Bands, and I think also you mentioned that there was a trader who sold you some software with buy and sell signals, um, and then we had chats before and you've had a quick look at what I was doing, and you mentioned something about doing a video for you to try and follow, just because you're interested in what I'm doing, and so I'm going to put it on YouTube so you can access it. And also I'm going to use this as a medium of doing my journaling, because sitting at the charts, doing full-time work, and then trying to sit down afterwards and then journal on your different time frames, it's just taking too much of my time. I've got to be the dad as well, haven't I? I've got to draw the line. So the way I'm seeing it is, if I can talk about it when I sit down at the charts, talk about my ideas of daily bias, how the market has moved in the previous week, market structure, any trades that I've taken. If I can do that in, say, 15-20 minutes, and then I can build up a library of journals that I can just then refer back to. And if there's any trades that I've taken during the week, when I think what I'll do is I won't edit the journaling bit and my ideas and concepts, but when I come to a trade, obviously there's no point in taking if I'm sat down at the charts for 4 hours, I'm not going to take a video for 4 hours. What I'll do is I'll edit it near the time that I take a trade and include why I've taken that trade. And then, more importantly, for my own benefit, is if I take a losing trade, what the problems were, why did I take the trade, as in what was the psychology behind it, was I impulsive, should I have got out the trade earlier, all these little sort of details to help me sort of get better at filtering out the bad trades. I can't go through everything now, so I'm just going to talk. I'm sure I'm going to get questions from you when I next see you. I tell you what, you could even put a comment in the comments, couldn't you? I tell you what, even better, subscribe. Isn't that what you do? You subscribe, yeah? I'll have one subscriber. Give me validation, because you know what it's like, Mac. You can't speak to anyone else about trading because they're just not interested, are they? I speak to my wife, she just glosses over, and friends and other family, they're just not interested, are they? They don't get it. They're not obsessed. So this is a good way of validating myself, isn't it? And when we get together, we just don't stop talking about trading. So there you go. I can get it off my chest this way. Right. So what would I do? I would initially look at. Oh, hang on a second. My thing's paused. Why is that paused? It's no good, is it? I've got to be a bit careful of that. Why is that paused? This is OBS software I'm on. Now this is not refreshing. I think there might be something wrong with my driver. I've downloaded this software and I don't think it's liking it. Here we go, it's refreshing. Bizarre. Anyway, I'm sure it's going to plague me later on. I'll keep an eye on it just in case I see it freeze. Right. Okay, so weekly. What are we looking at? Okay, price has come down. It's tapped below this. This is a monthly low. It's tapped it. This grey box is a volume imbalance. It's closed and opened around the middle of it, 50% range. You might hear me refer it to consequent encroachment, but that seems to be a bit of a mouthful for me, so we'll just call it halfway. And then we've seen price continually step up using down closed candles and like these gaps, we call them fair value gaps. They've come down into it, and then prices reacted off it. Come down, prices reacted off it. And then what we tend to do, if I look at the weekly, let's have a look. Weekly, gosh, because we tend to go from weekly, daily, 4 hourly. I'll be honest, I'm not a fan of the 4 hour. You know, what we're looking at, six candles in a day in a trading session, 3 or 4, a lot of movement can, and the price action can happen within that candle. So I'm not a fan of the 4 hour. I like the 1 hour. I'm into the 30-minute now, definitely 15-minute, and to be honest, I really like the 5-minute chart. And then I drop down into like 4, 3, 2, 1, 30 seconds. Some people do 15 seconds, but I think there's just too much movement in that. 30 seconds seems to be a nice sort of in between a minute and the 15 second. I've had more success trading off the 30 seconds over the 15, but you know, that's me. You may find it easier or whatever. So weekly, here we go. Again, what we have seen most recently, I sort of kind of looked 3 weeks back, 3 or 4 weeks back. Price has taken this monthly high, it's come back down, closed well below it. Then the next candle has come back down into this order block. Nearly touched on the open there, but as you see, this wick here, which is the swing high, I've graded it here. That's the 50% level. You notice that it's closed above it. The next one is closed slightly further down, so there's like a gap there, settlement gap, and then price has then really banged to take the weekly high 2 weeks ago, but it's closed below the monthly high. So could this mean it want to retrace back into? This is like a volume imbalance. I think this is a daily volume imbalance. Could it use the order block to then reject and then send price further higher? We've got a big volume imbalance here. We look at around how it would react around these levels, especially the 50% level rejection block, and then we would then grade this massive wick. When they're this big, sometimes it's better to do like a 50-50. Yeah, so if it was to come up here, then we'd look at the 50% here, not just here. And then we'd look in the lower time frame charts to see how prices reacted around it. So then we'd look at the weekly. It's looking fairly bullish. Could be anticipating some retracement back. You know, retracement back into possibly again into this fair value gap. If it went lower than say 50% of this order block, there, that orange, then maybe could price start to, you know, drop down and take out this low again and go further into this monthly low. That's quite far ahead. So let's not get ahead of ourselves. Right, I'll try and not ramble. Okay, so we're looking at the daily chart. So this yellow grading here, this yellow fib is 20-day look back. Interesting to note, as it's come back down into the 75% range, it's had a big reaction off it. Okay, what else can I see? Price changing the state of delivery here as it's crossed over this open. It's left a volume balance. It's come back down into this daily fair value gap. The price has then gone to attack this high. Interesting to note, this high and this high, I believe, is 360, 360, exactly the same high. That's a relatively equal high. It's hit it, and if you thought it was extremely bullish, you think it will continue and close above it and start attacking this volume imbalance here. That's the weekly volume imbalance, if I can remember. And then we got this high, which, as you can see, that candle opened pretty much on the 50% We've got this high, and then we've got this wick on the weekly for it to continue. But we do have big fair value gap underneath. It could come back down, bounce around in it for a little while, maybe drop down, take this low again because there's a lot of liquidity around here, and then continue going higher. But at the minute, we would say it's risk off. So if this is going higher, the chosen market I like is the Nasdaq. So we would, yeah, I believe we call it risk off because that would then likely to be lower prices on the Nas. Okay, so let's get on to the Nasdaq. These are my weeklies here. As you can see, a monthly low here. This is denoted by this. Right, each line, you might start to think I'm a bit crazy. Each color, each line, each style of line, each box, each color of box is coded in a sense that I know what it is as soon as I look at it. Although the volume imbalance is what I would do now. I realize the volume imbalance, you can have many on different time frames. When I, for example, if I click on that volume imbalance, I would then look over to, so Bosch, is it a volume imbalance? No, sorry, that's a weekly. That's weekly. I can tell that by the color. Yeah, weekly. If there's a volume imbalance, here we go. Let's give some of that. I can click on it, and then I can rename it and then put the hourly. If it's an hourly or 4 hourly, so that's how I can keep track of stuff. And then I can switch them. So yeah, I've done it weekly. There you go. I've already started doing it. So I can switch them all off, and then just bring on the weekly. That's how I navigate. Because if I was to put all of these, I think my OBS software just paused, froze again. I don't know how long for, but I just got to carry on that. Sunday night, I've got work in a few hours. You know, I would if I was just looking at it, I'd be done by now. But because I'm talking about it, it's taking 10 times as long. Okay, right. That's taken a low. It's done the same on the S&P. I would now bring that down. That'll be the newest swing 20-day look back. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Yep, so that's the new grading. If price was to, if the dollar retraces, we could see maybe something happening around 75% level on the 20-day look back. But there is relative equal lows here with another monthly low. We've got a lot of untapped liquidity all the way. So much of it. I mean, that's a massive price run, isn't it? I mean, I can't imagine it ever going that low, but long-term bullish, aren't we, for Nasdaq? But short-term, it could be retracing back into these levels here. Okay, so most recent, there's been a lot of weird price action over the last few weeks. Daily here, daily fair value gap hasn't taken that high there. It's left in place, so relative equal high. Drop down, taking the low here, closed above this weekly fair value gap. It's closed above, so maybe price could be reaching further into his up close candle and up into liquidity up here. It's not that clear, to be honest, for me. I'll be honest, I don't know everything. Okay, what did it do with the S&P? Okay, so took out this low here and closed above the lower quadrant, and now it's reaching up higher. Relative equal lows here, fair value gaps, more highs, and also we've got to think about, I call it a dealing range. So dealing range, what do I do? So dealing range here, it's around the 25% level, so you can anticipate a pullback, some description. So the dollar goes lower. The dollar goes lower into this fair value gap. Maybe start dropping. Does it take this low out here before continuing going higher? If it drops back down, then that will give us a reason to believe the price might go higher to take these highs into this fair value gap. Difficult to say, but at the end of the week. Right, so what did I do trading wise last week? Okay, so as you know, I was live trading, but then, you know, I was break even for a long time. I was losing a bit. I just wasn't I didn't think I really understood an awful lot of what I was doing. So then I've been demo trading for about a year, and then waiting until I was consistently profitable for a good few months. And I've been fairly consistently profitable. I think I went down to about 6,000 at the beginning, and now I'm starting to pull back, obviously, in profit. I am trading more micros. I'm trading 10 micros, and the reason for that will be obvious when I start trading or put a trade on, and you can see how I start peeling off micro contracts as I'm making profit. So when I do a recording and edit the recording of a trade that I may or may not take, or I do take, it's going to be good use for my own benefit massively, because more so when I make a losing trade. If I make a losing trade, then I can start digging deep into why, my thoughts of why I took the trade. What was the psychology behind it? Was price moving quickly? Did I feel like I was going to miss out on the move? Was I impulsive? Was I finding, like a lot of the bad trades I take, I try and find stuff in the chart that's not really there, that I shouldn't be trading on, and maybe not adhering to specific times of the day. So, right, are we? Let's have a look at the 15 minute chart. So, gosh, 15 min. Here we go. So I have a 15-minute hourly, and that should be an hourly, and this one should be a 4-hourly. But I don't know, I'm not really great. I tend to select the 30-minute here. Okay, so 15-minute chart. Let's have a look. What trades did I have? Let's get rid of some of those. Oh, well, that was it, yeah. So during the week, I think I captured this big run here. Yeah, I did. Obviously, I did. Yeah, that's why I made a good profit. Here we go. Took a short up here, but like I've been finding, and this is what I want to try and conquer, is I see price move quick, and then rather than taking off, say, half or 2/3 of the trade, and then let the other pull my stop loss up after I've taken a low to just over break even, and then let the rest run, I tend to just ram my stop loss up and then just take what I can get. Now, I want to stop doing that. That's one thing I really want to stop doing. I think it's just greed, because I think to myself, well, if I take 7 or 6 off and lose 4, I'm missing out on that profit. And then if it only moves a little bit more, I could have got the same amount as leaving all 10 on, than rather than hoping it gets to maybe this low and then taking the rest of the 3 off or something. Does that make sense? Probably not. Does in my mind. So that's something I need to work on. That's something I'm going to journal and talk about. So if I'm into a winning trade, I can start really analysing why I took the trade. I think I took one trade and then scared myself out of it and closed it. But I think the main reasoning behind it is came up to this 15-minute, tapped into this daily fair value gap here, and then I saw on the 30-second chart, they call it a breaker, like a mini breaker, and then a fair value gap, and the risk was really small. The risk of where I put my stop loss, it was so small, I thought, yeah, let's just go for it. And then it started moving quickly, and then I got greedy and then decided to take my profits. But if I hadn't to take profits, this, you probably saw it, is a monster move. I mean, what is it, like over 1,000 points? Imagine if you held out to at least this low. At least this low. I mean, even there, even this 5-minute fair value gap, or you know, look at it. Bosh, all the way down. If you took it from there, that's 900 points. I mean, if you had 10 minis on there, that's enough for your whole month, isn't it? Okay. But that was the Thursday, wasn't it? Thursday. I took some other trades at the beginning of the week. I think I made a successful trade here. Made a successful trade here. I'm not going to go into the reasons why I went into them now. I'm going to talk about the ones that I actually take. And then I was hoping that this pink fib here is a thank F, it's Friday fib. So a weekly, you go a weekly, this weekly range in here, you would expect it to retrace back up into between 20 and 40%, which it did. This is and after it took this major low. I mean, that's such a great trade to take. You know, if you capitalize on that, you could just do that one trade for the whole week and be satisfied with what you've done. Yeah, so here we go. Unfortunately, I didn't get into the trade because if you look at the 5-minute, even the 15-minute, I mean, look at the state of this from the morning. Where are they? So once the market opened, pre-market was not too bad. There was something in here possibly, but I wasn't convinced to take it. As you can see, that price dropped below this low, which is the Asia low, near to the London Open. Here, it dropped down, took this low out, and then left 2 nice fair value gaps laying over the top of this low here, and it came back down into it. I think when I dropped down into the 5-minute, it wasn't very clean, but price still nonetheless reacted off it, took out these relative equal highs for Thursday Asia. Took out this high here. There was other reasons as well, like had like a midnight opening range, fair value gaps and highs and lows that it took out. And then when you looked into the regular trading hours, the previous highs and lows were quite relevant. Anyway, I'm throwing stuff at you. I've got to stop. I'm throwing stuff at you that you're probably not going to understand. So let's keep it simple. You'll stick with it. It will become more obvious what I'm talking about when I'm doing it. I'm looking at hindsight at the minute. So yeah, so here we go. Here's this purple line. Took this low out. I think in the 5 minute was just really crazy on the Friday. Price was just overlapping. There was nothing clean in here like stuff like this. So I didn't get into a trade. There was a possible trade here when this candle dropped in to a 5 minute, but it was after a specific time, a macro that I'll talk about later on. But then look at the way price after, oh yeah, I think here there was a lower low on the Nasdaq, but it was a higher low on the S&P, and then still a lower low on the Dow. So it gave me like a little heads up that there may be a stop. This may be a stop hunt. Send price higher, straight up to, in fact, 40% even further. The retracement didn't quite. Did it take that high? No, it didn't quite take that high. So this is still in play. This relative equal low is still in play. So could we be looking for higher prices? Long term, it's a bit hard to say because we've just taken this dotted pink line is a monthly low. We've just taken it, and then look at the way it's just banged about it around here. Yeah, taking a low, taking a high, come back down, taking a low, taking a high, not quite taking a high. Could it come back down, take this low? The fair value gap. This is a opening range. You know, if it came back down here into this, I think this is a weekly fair value gap. Yeah, see how it reacts off that. Then we could start maybe figuring out a good plan for during the week. So what we got on the calendar, I think it's a bank holiday Monday, isn't it? Bank holiday Monday. Yeah, so tomorrow's a no-go. I think you like the Forex, don't you? But that's going to be, yeah, unless you're doing pound euro or a sort of an unusual pair, then maybe it won't be affected. But if you look, Sunday bank holiday. What is this? Japan? Sorry, this isn't right. Only interested in the US market. Only love USA. You know what I'm like. Love the USA. Oh man, look what Trump's doing. Oh, can't we have some of that over in this country? Can't we have just even 1 trillion investment in this country, let alone 20? It's insane, isn't it? Okay, apply filter. So there isn't a bank holiday. What? Why was I thinking it? Yes, there is. Bank holiday Thursday and nothing on Friday. So tomorrow, no news drivers. And then we've got Tuesday, CPI, retails, PPI, pending. We've got another news driver. Then we've got unemployment claims, and that will have a big effect. Well, could do, may or may not. Durable goods. And then nothing. So it's going to be a weird trading week this week. Do you know what? I'm just going to have a look. I don't think I'm going to do much next week, and then see what the week after is like. What's the week after like? At least you're getting into a bit more normality here. Yeah. Non-farm Wednesday, so we could be looking at good Monday. So Monday could be quite a good one. Could see a really big move on the Monday. Wednesday, unemployment close Thursday. So you'll probably see maybe a massive move on non-farm. So maybe Thursday or Friday, even looking for like a good retracement back again, like we have done with that TF5 thank F. It's Friday fib. I'm alright, I won't swear. I know you're Christian. So am I deep down. Well, we're all Christian. We all adhere to Christian values, don't we? So this is what I've told Joe. She might not go to church, but she's still a Christian. Okay. What more can I tell you? Not much more. Like I say, any questions? Just bang in a comment. Yeah. Oh, yeah. I was going to just tell you this is my 5-minute chart. Here we go. 5 minutes, and this I really like the 5-minute chart. Here we go. See, it's even obvious on here. There's a low here, not a low here, and because you can see that the line, the up line, is shown on the other 3 charts, so you can see quite easily what low you're talking about. So I know it's that low there. Has it affected? See, this is quite a good tool. And then obviously the US dollar and euro dollar, you look to see if there's any decoupling on these two, because you may see a lower low here, but then that might not be a higher high here. So that might indicate that it's taking stops, taking liquidity to head higher. So you kind of blend all these markets in together. So I have this screen here. There's my decoupler. What do we call it? What do we call it? Something divergence. SMC divergence. Oh, I forget now. Doesn't matter what it is called. It's just got to know how to use it, how it help you. Okay. So you've got the 8 chart. What's happening to Bitcoin? Let's have a look. Bitcoin. It's going to be a horror show. I know it. Wow. Okay. Definitely looking a bit spicy, isn't it? Look. Imagine hoping to get a higher high. Lose nearly half of it. Wow. Pretty cool. Could it come down? We're retracing well into 80% of that range, aren't we? Could drop lower. I wonder if it's got another pump in it. Interesting. Anyway. Okay. So that's it, Mac. I'm going to call it a day. Sunday. Hope you had a good weekend. Text me if you like. And if you don't subscribe, I will be very disappointed. Okay, mate. All right. Be safe and trade carefully.